tariffs front and center again, Tom. We expect President Trump here to announce tariffs on the auto industry. I guess bigger picture, Tom, I'm actually very curious to get your take. You know, longtime trader like yourself, longtime student of the markets. Are there indicators you're watching, Tom, you know, daily that suggest to you, okay, you know, I think more panic is on the way, or no, things look good, time to back up the truck? What are you watching on a daily basis, Tom?
Well, I don't actually think, hey, Josh, just to say hi to start off, I'm not sure it's either of those. I think, you know, I'm this crazy efficient market theorist, and I always believe that everything is pretty fairly priced in when we're kind of looking at it. So I don't think there's anything that Trump is going to say or do, or the tariffs are going to impact the market in any way that's already not priced into kind of how we close today. I mean, I think that there's a certain amount of a little premium pumped into volatility right here, just, you know, just because there's a little bit of uncertainty. But for the most part, I think the markets have pretty much internalized, you know, whatever is going to happen. The uncertainty's been priced in. Let's put it that way.
Do you think what spooks the market, Tom? I'm curious. Is it when you see a headline like, okay, tariffs are on the way, or is it just the lack of details there and the uncertainty, and that's what causes the selling? Can you separate the two?
It's really hard to separate the two. You see, because so I think it depends who you're asking the question. If you're asking that question to a retail investor that's just reading news, I think there's an emotional expectation from it, and they get very nervous, or they kind of or they may get nervous, or they might look at it as an opportunity. I think from a active participant in the market, if you're a trader, and you can be a retail trader, just anybody active in the marketplace, you're going to see the futures move and the markets move before you can even start to kind of internalize / commoditize that news in a way that you can apply it. So I don't think that from a trader perspective, it really has any impact other than to make you decide, hey, you know what, I'm going to sell this thing if it goes up, or I'm going to buy this thing if it goes down. And I think traders look at it differently because they're actually reacting to the market moves, whereas somebody that's just seeing the news is reacting to the news. I think they're two completely different stories.
Let me get your take on some specific names that I know are on your radar, Tom. One was GameStop. Rare analysts noting, listen, rare operating profit there for its holiday quarter. I'm curious, you look at that name, you see what?
Well, I looked at GameStop's funny because I traded it for earnings last night, and we were kind of put sellers like we always are for earnings, and it worked out. But it worked out for all the crazy reasons, which was I actually hated the news in GameStop today, not because they missed their earnings or any of that kind of stuff, really because I don't consider it an interesting business model to me.
Why not, Tom? Why do you say that?
Well, because it feels a little .com-ish to me. It feels a little like, oh, I'm going to throw a .com on the end of my name. I'm going to buy some Bitcoin with our excess cash because we can't find a company that's going to be accretive. We can't find innovation that's going to help us build the company. We're just going to buy some digital assets because it has asymmetric upside and because the volatility is trading higher than, some multiple of risk-free rates. I mean, that's the logic there. I absolutely hate that. I think it's way too much Ponzi scheme-ish to me. And if it backfires on a principal basis, I don't like it at all.
Another name I need to get your take on, and another name we talk a lot about is Tesla. Finished in the red today, Tom, although I did have a financial analyst on the show today, still bulled up on that name, sees green shoots ahead. Your thoughts on Elon Musk's company? So
I trade a lot of Tesla. And the reason I trade a lot of Tesla is not because I love Tesla one way or another. The reason I trade a lot of Tesla is because it is Tesla and NVIDIA. I'm an option trader, and Tesla and NVIDIA are the two most active. They trade the most contracts. They have the best markets and the most actively traded underlyings outside of, S&P indexes. So that's why I trade a lot of Tesla. Tesla got whacked pretty good today, but, Tesla's a self-inflicted wound, and Elon made his bed, and he chose a side, and he's paying the price for that. I you know, Josh, it's weird. Tesla's a weird thing for me. I've driven a Tesla since 2015, and last week I traded in my Tesla for a Lucid. So that should tell you how I feel about Tesla, just personally.
And you
But I
did, and you
traded.
did that, Tom, because of the branding, because of the politics.
I did it because of the politics. I did it because I did not want to drive around in a Tesla. I feel like that doesn't, it's not what I believe in. It's the reason I bought a Tesla in the first place is I was fascinated by the technology. I've had two Teslas and I loved the technology. I loved the car. I thought it was really a good experience. I think the fun's been taken away from it when Elon decided he decided to get political. He decided to take a stand, and it kind of, it's a message that I don't want to send driving around in that car. But that doesn't change the way I trade. And if I think Tesla gets cheap, I'll buy it. If I think Tesla's expensive, I'll sell it. And for me, I think Tesla right now is kind of middle of the road, but I don't think it has the asymmetric upside that it once had. And in fact, I think it has some pot odds risks to the downside. And I'm definitely not a Tesla bull. I'm a Tesla premium seller if I'm anything else. But listen, he made a choice, and that's you get what you get.
Listen, I see plenty of Lucids in my suburban New Jersey. That's a beautiful looking car, Tom. Final question. I do want to get your take on gold. The record run we've seen. I'm curious, what is the message, I guess, Tom, you think the metal is setting us as traders, as investors? And do you see that run as sustainable?
Well, gold's been on a crazy run, and I do trade gold also. And it really hasn't had a downtick. It's been almost, hyperbolic. I would say that gold is interesting on a couple different levels. The gold silver ratio is very high right now. So if you wanted to be long silver and short gold, that's an interesting trade to me. The other thing that's interesting is that gold has been it's almost traded like a flight to quality, which is kind of what bonds used to be. And there's used to be some, safe stocks and things like that. But now it's pretty much been turned over to gold. And gold is really the only flight to quality asset out there, or the only asset that's acted like a flight to quality underlying. I think personally, gold is a little rich up here, and it hasn't rolled over yet, but I feel like gold has limited upside, maybe a few more percent, and I think it's got decent downside potential. So I think gold becomes a very interesting short at these levels, but a careful short, a small short. But I like gold from the short side. I think it's got $200 of downside and maybe $50 to $100 of upside here. So that's my take on gold. I think it's rich. It's had an unbelievable run. It needs to pull back a little for it to be interesting again.
Tom, we covered a lot of ground there. Thank you so much, my friend. Always great to have you on the show.
Anytime.